Matt from InvestiQuant. Today is Tuesday, June 21, 2022. Friday was a volatile session for the market in that it opened and pushed higher initially, then it dropped, and then it pushed higher again, and then it dropped, ending up about where it started at with a doji candlestick for the session. So a doji is where you open and close in roughly the same location. That took place on Friday. This morning we're seeing the markets push higher. We're trading up well above the highs from Friday. So that's what we'll be looking at this morning, is what has happened historically following a doji when you gap up above the prior day high. So I've got all four instruments selected here. The setup's based upon entering the market long at 9:30 a.m. Eastern time and exiting at 4:15 p.m. Eastern time. Now, like I just said, we are trading above Friday's high. So to add that to the test, I'm going to go opening filters, opening area. I'm going to hit equals here next to open above prior day high. I've selected that. You can see it's up here in the header section now. Next thing I'm going to do is go to the price patterns library, and in the candlesticks section, I'm going to say that yesterday or Friday was a doji candlestick, and that's available on the active today. You can see it's already right there. All I got to do is click on it. Once I click on it, it adds it to the test. And then lastly, I'm going to go to the indicators library, and I'm going to say that Friday closed below a 200-day simple moving average. I'm just going to use a 200 for this one to keep as many samples as possible. And then I'm going to click on View Results. All right, here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when the prior session had a doji candlestick that closed below a 200-day simple moving average, and in the following session, you open above the high of that doji candlestick. Historically, we've got 30 samples here in the S&P dating back to 2003. For the NASDAQ, there are 20 samples, 32 in the Dow, 32 in the Russell. If we look at the win rates on them, the S&P coming in the strongest of the group. 73% of those have closed above the opening print the following session. For the NASDAQ, it's 55%. For the Dow, 59%. For the Russell, 66%. If we look at the average moves, you'll see the average loss just a little bit larger than the average win in the S&P. The average loss is also larger here in the NASDAQ, and the average loss is larger in the Russell. The Dow is the only one with a larger average win compared to its average loss. So bigger moves on average have been skewed towards the downside following this pattern, but historically, more often than not, they're closing above the opening print for the session and giving you a green candlestick on the daily candlesticks. Before I sign off, I want to mention tomorrow we'll be hosting a webinar at 4:30 p.m. Eastern Time. There's going to be a link underneath this video that you can sign up for it, and we'll be talking all about our auto trading programs. We've got a new auto trading program that's designed a little bit more towards people with smaller accounts, and then we have our normal Trader 2 program that's been around for a while available as well. We'll be going over both of those programs and even showing you what happens when you put them together, which can get some pretty exciting results. So that'll be tomorrow after the close, 4:30 p.m. Eastern Time. You can sign up at the link below this video. We'll hope to see you guys there. Good luck today, guys. We'll see you next time.